1.
Good afternoon. I am Jeff Hirsch, editor-in-chief of the Stock Traders Almanac and publisher of the Almanac Investor Newsletter, and welcome to Wealthwise on Biz Talk Today TV, brought to you by Crosscheck Media. We are live on YouTube and X Spaces. For my latest picks and analysis, go to stocktradersalmanac.com and click on log in the upper right corner up there, and there'll be a link for a free trial. Today, my friend Mish Schneider joins me. But first, here's a little bit what's on my radar. Russell 2000 was looking at an intraday high midday, but didn't make it. It is the closest it's been to the November 24 and November 21. Ironically, those are Novembers. We can talk about that. We didn't get there, though. If it does confirm and go through, that'll be bullish. If not, Mish and I'll talk about a potential double top and other things. But this, movement in the Russell is perfect timing for our new small cap recommendations. We put out a basket to new subscribers last week, so if you want to check those out, go to stocktradersalmanac.com. The Fed cut a quarter point as expected. That's what we've been looking for. Everybody was looking for it. Seems to be a bit of sell on the news towards the end of the day. Dow gave back about half of the gains, up about 260. Some negative numbers, marginally from Dow, from S&P and NASDAQ. As we said, Russell was higher during the day. Interesting to me, new Fed governor, it's Myron, right? That's how you say it. He dissented, the only one, looking for half. Of course, that's what was expected to do. Still not surprised for a little bit of potential for a sell-off here in September. We've got the end of Q3 weakness with the portfolio restructuring. Leads into the October 31st mutual fund deadline that we've talked about. And it's also triple witching September, one of the weakest of them. The Friday, triple witching Friday, expiration Friday in a couple days, is down 12 of the last 13 for the S&P. The week after triple witching, down 27 of 35 with some nasty hits. And of course, there's the old adage, sell Rosh Hashanah, buy Yom Kippur, which I'll be posting up probably tomorrow with the stats on there. That happens next week with Rosh Hashanah. I guess the first day is Tuesday. Mish is nodding for me there. Yes, so Shana Tova to all of my Lancemen out there. And also the 2026 Stock Traders Almanac is here. You may have seen me post on it while we're at a Future Proof. 59th edition, same age as me. It's available. I think today is the official Amazon release date. So without further ado, let's bring in my friend, Mish. She's a former special education teacher. Very special. Interesting. I don't think I knew that. One of the first female floor traders on the New York Commodities Exchanges at the World Trade Center. Now she is Chief Market Strategist at marketgauge, which is a 25-year industry-leading financial publishing company. She's also managing member of marketgauge Asset Management. You and I have chatted on this. You've got it's a asset managers in RIA. You've got a whole host of other credentials and histories, but thanks for coming on the show. How you been, my friend?
I've been great. And by the way, congratulations on the launch of Traders Almanac 2026.
Thank you.
I'll have to go get my copy for it.
I could probably arrange that. Maybe I'll see you in Florida.
Are you going to Sarasota?
I'm going to Orlando.
Oh, I'm not going to Orlando. I'm going to Sarasota.
Then I'll have to ship you one. But excellent. How's Keith?
He's great. He wanted to say hi, but I'll just have to send his regards for him.
Send him mine as well. So before we get into the rate cut reaction and your current trades, just tell me how you got into the business a little bit. How did you go from special ed teacher to floor trader and now just, financial expert?
Fate is a funny thing, right? I firmly believe in it, but I was a special ed teacher for a long time. I wouldn't say a long time because I was still in my very young 20s, but I thought that was going to be the direction I was going in. However, I wound up meeting a girl who lived in my building who worked on the floor for Merrill Lynch. And so she said, "Hey, you want to come down and see where I work?" And I'm like, "I'd love to." And I didn't know anything about finance. I mean, I grew up in a very modest family, so we didn't exactly talk our stock portfolio at the dinner table.
I
And
did.
you did, right? Of course, because your dad is famous. My dad was a mailman. Um, famous mailman
Good job. Good
amongst.
work.
Yeah, really, really. So I went down there with her, and I just like my brain exploded because I knew this is where I needed to be. And it took a while, but I got a job eventually with Conti Commodities, which was the futures division of Continental Grain. Paul Sarnoff, who wrote the book Silver Bulls back in the day, he's the one who took a chance on me. So I'm forever grateful. May he rest in peace. But anyway, yeah, so I got down to the floor. I'm giving you the very express version.
Yeah.
I knew nothing. I relied a lot on the kindness of strangers. The men were unbelievably fantastic in helping me
Wow.
because my job was in coffee, sugar, cocoa to get on the squawk box and tell guys all over the world what was going on and who was buying, who was selling. And so I would like run over to a friend and I'd say, "What's going on?" And then they tell me. And then within 6 months, they made me an actual member of the Coffee, Sugar, Cocoa Exchange. So I went from a know nothing to rookie of the year. And then I went over to Comex when Conti Commodities went under because of the Hunt brothers. When they tried to corner
Right.
the silver market, they were
1980.
right. They were clearing all their trades through Conti Commodities. So they went belly up and so did Conti. So came in one day and I was out of a job. So I went over and I worked for a pretty famous gold trader at the time, Charlie Federbush. He taught me a lot about the metals. And then eventually I went over to NYMEX and that's where I spent the bulk of my career was trading crude oil, natural gas, and heating oil.
So, I mean, great story. I mean, there has to be something that clicked in your head. I know when I started working with my dad, there was a moment where he was explaining something to the group of analysts around the table, and everyone was like, "What are you talking about, Yale?" And I was like, "I got what you're saying, Dad." Was there a moment or something that triggered where, I mean, you go from special ed teacher to like, you know,
Well,
amazing trader?
yeah, I mean, I think I became a special ed teacher. Listen, I love special education, and actually, it's kind of circling back into my life in a very unique way, which, is a future project that I'm working on right now that involves the markets and my knowledge of education, especially education through full inclusion. So it's
Hmm.
not like I have any regrets about the path of my life, but I very much followed the path of my life that my parents wanted me to follow. So when I went down to the floor, I had been really good in math in school. I loved problem solving, and I was also an athlete and super hyperactive. So, all of that fit. And it never fazed me that I was in a sea of men. I never even
Right.
thought twice about that, really. To me, it was all about the price action and fascination of everything that was going on. So it totally engaged me right from the get-go. And then I started learning about point and figure charts. And I learned from some of the best chartists in the world. I mean, those guys down there were the guys back in the day,
Yeah.
like Paul Tudor Jones. And when I realized how well charting worked, especially for somebody like me who was physically smaller than, when things were going nuts to be able to get in the pit and really compete with my voice, the charts actually gave me the clue when I'd see a breakout and I would jump in and then jump out. So it all kind of fit and it raised me. I learned everything about the world. I had the pulse on everything that was going on with the Middle East at the time and, Russia and OPEC. And I mean, you name it,
Hmm.
you learn it, even though it
So,
wasn't like we have now, social media at our fingertips. And I also loved being around all those men. Those men raised me. Let's put it that way.
cool. Bunch of uncles and dads and stuff, right?
Exactly.
So you mentioned charts. You mentioned point and figure, which is an incredible art and science. So you consider yourself a technician? I mean, what's your process? Is it all technical, or are you looking at other?
No, I'm very fortunate that I use the technical analysis and I happen to be really good at it. If I do say so myself, not to be immodest
Appreciate the
here.
humility.
Yeah, no, but I am. I took to it really well.
Yeah.
Those patterns spoke to me. But I also now, after all this time, and even including on the floor, I've been able to have an intuitive sense of how fundamentals are shifting. So sometimes I'm like, I'll make a statement, even now, all the time, people will say to me, how did you know that? How did you pick that bottom? Because I get a sense of the things that are shifting, both from a fundamental and from a psychological standpoint, obviously. But I don't buy that instrument until I see the actual signal on the chart. So I've kind of combined them both.
I like that. So what are you sensing now? I mean, just gonna jump right into it. I mean, what's your spidey sense telling you?
Well, I'm really keen on the energy space. I mean, we've already been involved, obviously, with certain aspects of it. I mean, solar has done a lot better than people thought it would. But
Nuclear.
I've been buying natural gas. I won't touch crude oil right now. It would have to do something a little bit more significant
Mhm.
chart-wise, like get through $68 a barrel in WTI. But I'm already long natural gas once it really looked like it was bottoming, and I was writing about it before it bottomed. Because let's face it, we need natural gas, and that's what we're hearing now,
The
is
original
that
clean energy, right?
exactly. The clean energy is great, but you can hear a lot of producers now realizing that we're not quite ready to fuel AI, for example, in
Yeah.
data centers without what we have available here in the US. And we've got natural gas.
What what's your vehicle for trading the natural gas?
Well, I used to trade ong, but I've learned to hate ong. So now
Because
I
of the contango and
so now I trade Boyle, which is far more volatile. But actually, volatility doesn't bother me as much. So yeah, that's
so
where
that's the BOIL ETF.
BOIL ETF. Yeah. It's a little bit more active. It's a great day trading instrument. My goodness, if you're into that, but I'm not. So I have a position. If it breaks the recent lows, then I would be gone. But it looks like it's bottoming. And that supports the narrative of what I was saying from the fundamental side. So there you go. There's a perfect match.
So what about the overall market? I mean, what's your outlook there? What are you sensing there? Are we going straight up for the rest of the year? We got a little pullback like I'm looking for, maybe. I mean, the seasonality for me is becoming a bullish indicator because bearish seasonality didn't happen. So
Exactly. And Jeffrey, that's a really good point. We've talked about that here in the office, is that if the seasonality suggests bearish, like with gold, how many gold bears have come out because of the seasonality? And I'm scratching my head going, are you paying attention to all the reasons why gold's going up? So there's your fundamentals. And technically, this massive consolidation that we had that finally broke out of.
yep.
So it's the same thing with the market. I can't be bearish here. But my natural tendency is to always look for the weak links, right? Because, we climb that wall of worry. That's just the nature of the market.
Yep.
So am I terribly worried at this point? No. I do see potentials. One of the things that you and I were talking about before we began recording is regional banks, for example, because I remember 2023 in March, we had that flash crash when all of a sudden there was this huge credit debacle. And there are people, some pretty serious people like Ray Dalio, for example, who believes we're going to have some major credit default. Now, I'm not saying he's right or wrong, but what I'm saying is if you look at regional banks, KRE, it hasn't really, participated in this rally the way, say, the S&P 500 has. And number two is it tested the 50-day moving average yesterday, bounced, but I would keep an eye on that because it collapsed before the rest of the market did in March, and it gave you a great opportunity to get out and wait for the dip to be over.
So in that vein, also, we were talking a bit about the Russell 2000 attempt at a new all-time high today. I mentioned it in my preliminary remarks, and you were thinking maybe we're looking at a double top, and I made the point that we had made the ultimate closing high in November 21, almost touched it by about, missed it by about 73 cents if memory serves. For in November 24, again, that whole November top thing is very seasonal for small caps for me. Um, but you're suggesting or thinking maybe if we don't make the new high, we got a double top situation and the small caps. I mean, there is a little seasonal push right now around Labor Day for small caps, but that's another story.
You're actually even suggesting it could be triple tops if we're looking back at
Right.
2021. And so, I look at the market, obviously tech and growth, that's, been on its own fumes. And that April low was a fantastic opportunity for so many of these stocks. We've seen semiconductors make new all-time highs, SMH, if you're looking at that. And so I always, when I start to see that rubber band stretch where growth is so outpacing the rest of the market, I start to get keen on what could stop the train of the semiconductors or what's going to bring the rest of the market up. And today was a very pivotal day because a lot of very serious analysts and people who run billions of dollars.
Number one, worst fruit for your waistline.
I really love grapes.
The reason you love them is because 1 cup of grapes has more.
All said the same thing. A rate cut's going to be great for small and mid caps. Now, small and mid caps have done great to this point in anticipation of rate cuts. And that's been a really great place to be this year, is in some of these high earning small and mid cap stocks. But now that the rate cut happened, and now that we saw more duplicitous talk from Powell today, well, maybe this and maybe that, maybe inflation, maybe bad labor, maybe this was just risk management, maybe we need to do more. It was like, wow, the market doesn't really know. We go to the charts, right? So if the small caps do not break out of this area that we saw of the high today with any kind of volume, and we see the regional banks turn down, or retail starts to turn down, or transportation, which also hasn't participated, turns down, any of those things, or yields, which started to climb back up, go back up on the face of a rate cut, then I would say I would look to see where would IWM to me mean triple or double top. And I think if it breaks down now under, let's say, around 230, that might be an indicator. And I'm just doing this without looking at a chart right now off my memory.
So you mentioned the transports. To me, the relationship between different indexes, it just it invokes the Dow theory type mentality where you have a utility transport confirming industrial or a small cap. We like to compare NASDAQ, S&P, and Dow, sort of that kind of index relationship. Maybe the Russell's like that. So, I'm pretty bullish. My best case scenario is in play. Concerned here for this swirling end of Q3, October period. But the thing about the small caps that everyone's talking about, they're talking about it when the 200 basis points are cut, small caps outpace large caps by 10%. They're talking about 7 times since 1980 where, 6 of them are up. 7's not a big statistical set for me. And a bunch of them, you have just the small caps going down less. And a lot of these, I heard somebody mentioning it, or a smart person was like on Fast Money or something when I was driving over to the office over here, that those instances were recessionary, and when you do this in this kind of cutting in a non-recessionary environment, which we're in right now, large caps outperform. So again, I'm with you on the small cap concern. So where else do you see the risks?
Well, one of the biggest risks, and although I keep having the same conversation with people over and over, is that inflation goes out of control. And a lot of people think that we are heading into a hyperinflation environment like the 1970s. But I like to bring it down to what I call the trifecta of inflation. And so far, none of my trifecta inflationary indicators are telling me we're going into hyperinflation. Clearly, if we do, I think that stops the train of the market. It does. And we know commodities and equities can go up together to a point.
So what are these 3 indicators?
Okay, number 1 would be the gold to silver ratio. And even though it's come way off from the highs with gold outperforming silver not nearly as much as it was a few months ago, it still hasn't broken down where silver, the 80 is about the number that people like to look on the ratio. If silver starts to go under 80 in terms of its performance to gold, that's inflationary.
Where it's 80% of the gold's performance.
Exactly. And, right now with silver at over 42, in and of itself, that looks pretty strong. But it doesn't necessarily mean inflation. Interestingly enough, people would go, well, how can silver at $42 not be inflationary? It doesn't mean that we're not seeing a stagflation potential, but hyperinflation is something else. Number 2 indicator would be the dollar. So what's so interesting is even I have been so negative on the dollar. However, I just looked at the chart today because the dollar bounced after the Fed meeting. April And now in August, we made the same low within a few cents, just like we'd made the same high in the Russells, but within a few cents in the dollar. Is this a giant double bottom? I wouldn't rule that out. If it is, what does that mean for the market? Generally not great, although that may not be a factor. Certainly it means that our debt becomes more expensive because, we want the dollar to be weaker in a certain area till it's a slippery slope. But it also means that this hyperinflation is probably not going to happen. And then the third thing, interestingly enough, is something I learned on the floor a million years ago, and that was to watch sugar. Because sugar is not just a soft commodity, but it also measures a lot of social unrest. It's what people all over the world reach for when they can't afford to eat better or travel or whatever. Sugar becomes your sort of cheap vacation. And even though there's been so much bad press about sugar, it still applies. And sugar has been stronger than it was, let's say, pre-COVID, certainly a lot stronger. But it hasn't really been able to get back over 17 cents a pound. It's back. In fact, it was down again today. So any of those three factors could flip. But right now, I'm not so concerned about the hyperinflation. And this is a long way of saying, so right now, I agree with you that the narrative for stocks is probably more bullish than anything else, but you got to pick your places.
Yeah. My place I'm picking for concern is next year, midterm election year, when I think the tariffs will start to impact inflation or potentially could. And then you've got that weak spot of the 4-year cycle with the Q2 and Q3, the midterm year, because you've got that ramping up of the campaign mudslinging battles and the focus going away from the economy and the market into Washington, where there's going to be a pretty heavy battle for control of Congress with the razor thin margins they have right now. So that's what I'm thinking. We get a little weakness.
Well, that's possible. Actually, I was on Malaysia radio last night, and I always love to hear the questions they ask me because I try not to get into the political arena at all. But one of the questions they asked me was, did I think that politics are going to impact the market? But they were talking specifically about the shutdown that could now potentially happen in the government. And my answer to them, and I would love to hear your thoughts on that, is that we've had this threat for decades, and only that I can remember was in 2011 where we actually shut down, and it was one of the greatest buyouts.
Huge bottom.
Yeah, it was a
October
great
3rd, October 3rd, 2011.
Right, exactly. So do I think it's going to happen? Well, the percentages would be against it, right? I mean, what do you think?
I don't think it's going to happen, and if it does, it's a buy. And it'll set up amazingly right in, the bargain month, the best month to buy stocks, October. So we're right around here. So I think it's clickbait, basically.
One other thing I have to mention, because I'm very keen on watching the consumer. From a fundamental standpoint, it's 70% of the gross domestic product, right? So we know the consumers have to stay in the game and they have to keep buying. We just had the retail sales. It was stronger than expected. It's actually been up for the last 3 months. Most people would have thought just the opposite. So we know that the consumer, a lot of it though, is the much wealthier people, but we know the consumer is still in there, hanging in there, although nuanced. And that would be another thing, especially seasonally. As we get now into the holiday shopping season soon enough, seems to happen earlier and earlier every year. Will the consumer stay strong? And, you talked about 2021. If you look at XRT, which is what I like to use for gauging consumer because it's staples and discretionary, that peaked in 2021 and we are nowhere. And I mean nowhere.
So you're concerned about the consumer?
I am concerned about the consumer, not right now, but it's kind of like in my wall of worry mentality added with regional banks and potential transportation. I'm watching that XRT. It has done well. It made new 2025 highs today, by the way.
But not all time.
No, that happened in 2021 at like 144. I'm talking like a lot higher, like 30% higher from here. So we have not seen a consumer as robust as we saw when they were getting free money and sitting home and buying stuff on their computers.
Yeah, those were the days, huh? Yeah. So let's just get your grade, your rate, on the Fed and the cuts and the market reaction. Is that what you were expecting a quarter? Do you think they're doing the right thing, or you think it's necessary or not necessary with the way the inflation, the economy, economic growth, and job market is?
I think we should have cut sooner. I actually think that they were late to the party. I would have liked to have seen them cut, say, after we made that April trough, when we started to come back. That would have been a great stimulus to happen, and it probably wouldn't have goosed inflation too much at that particular point, because we've really only in the last couple of months starting to see inflation pick up again. That would have been the time to do it, but they didn't. So now they did it. And Powell sometimes is so incredibly honest, it's almost hard to believe. But he said, I don't think it's really going to do very much. And I kind of agree that it's probably at 0.25%. It gave somewhat the market what it wanted, but not by nearly enough. And then why would I want to see more rate cuts? Because we do have some issues, right? We do have issues with labor, as we're seeing. We have issues in the housing market, as we're seeing. I think that consumers are waiting for lower interest rates as well. I think part of the reasons why we're seeing stress in the regional bank activity is because that really measures rural communities, how much they're borrowing and spending and doing home improvements and things like that, waiting for lower interest rates. So will we get it? I don't know. Now we're at a situation, though, again, where we have to go back to, was it too late? Because if we do 75 basis points more, are we really going to goose that hyperinflation scenario that we're watching for, too?
I think the Fed is always late by design. They have to look backwards at some data. They're not in the speculative market, in the speculative business. They're there to adjust things as they see. So maybe they're late, maybe they're not. I mean, the economy is pretty strong. So I'm hearing from you that your concern is mostly the labor market and housing with rates, because economic growth is pretty resilient and inflation seems to be ticking up, but under control. I don't know where they get their 2% number. I don't think they're ever going to get that, but
no, actually at Jackson Hole, he said that, well, maybe 2% is unrealistic and 3% is probably good enough.
So my analysis of CPI going back through all the Fed data to the beginning of time, 3.1 is the average inflation level. So,
Well, you can't have, just from a sensical standpoint, how do you have a growing economy and keep inflation under 2%? That never computed in my mind, because if we're really robustly growing, then people are spending money and things will get more expensive because of supply demand. That means you have to have a little bit of a higher core inflation rate. I don't know, that's just my logic, but obviously not Fed's logic.
So energy, gas, oil, you don't like. Gas, you like.
No, I don't like oil. I like gas. Oil has become a political football, and I usually try to stay away from things like that. But I still like EVs. I know September 30th is a big cutoff for the tax incentives, and people are all worried about that. But I'm not so worried about that. We saw Tesla just exploded. I'm still watching Rivian. We're in it. I still think that uranium is still a good situation. Obviously that's exploded in the last couple of days. And I'm looking around at, I'm still really interested in AI, but more and quantum computing, but not so much the love stocks, more the stocks that have been bottoming out, like the IBMs and the advanced micro devices and the Salesforce. We have positions in 2 of the 3 of those.
What about Supermicro?
Supermicro looks pretty good also. I
own that one.
Oh, you do? Good. QUBT looks great, obviously, but I think IBM could also benefit. And I'm really into the AI in the biotech space. So we've been long Tempest for quite some time right now. I like AbbVie. What Money Show in the beginning of the year asked me what my 2 top picks were, and AbbVie was one of them. That's close to all-time highs right now. So that's good. And then, of course, I've been sort of looking at the vanity trade. I coined that phrase. And that's the impact of the diet drugs. The diet drugs themselves. So I think Eli Lilly and Novo Nordisk have bottomed out. And I like what people are doing with now that they are thinner, what they're buying, what they're looking at to buy. So I've liked Elf and Ulta and now Kohl's because it has Sephora and Stitch Fix. Stitch Fix has come from the dead, out of the dead, is resurrecting, clearing the 200-week moving average for the first time since 2022. See, that's what I mean. The narrative and the technicals, when they marry each other, I get super excited.
So you're excited about the vanity
So excited. I don't think there's anything that anybody can do to stop the train of people wanting those diet drugs, feeling good on them, realizing that they gives them a freedom and to eat a little bit more without the fear of gaining weight. They realize they're going to be on it for the rest of their lives. We've seen the other health benefits for diabetes and heart disease, all of that. I think this is just a mega trend that is just in infancy right here. And even Match.com has done, if you're feeling good about yourself and you're single and you've been sitting home, sort of closet eating and not afraid to really go out, put yourself out there. Now, all of a sudden, you just lost some weight. You feel good. How do you date these days? As far as I know, you date on an app. I've been married for so long. I'm not an expert on that, but still.
I date in the kitchen.
You date in the kitchen. You like
with my wife.
Oh, with your wife when she's cooking. So
when I'm cooking.
Oh, you're the cook. Oh,
I'm the cook.
Oh, you see.
Did you with this the drugs, the diet drugs? Did you see General Mills?
Well, and McDonald's and all those food companies that
the
are
ultra processed.
They don't want junk food. That's what I'm saying.
No.
We're changing, and I think it's awesome. I really do. I'm thrilled.
We've discussed that. I mean,
yeah.
I'm on a 48-hour fast right now. So.
Well, you did it the old-fashioned way, but not everybody. Listen, I have plenty of friends who have struggled their whole lives, and what's really hard is to have a friend like me who's never struggled with weight.
Right.
And so
my father was like that.
Yeah, and I've heard all the excuses when I go out with these friends, I'm not really eating, but they are. So the fact that all of that psychological baggage of obesity can now be rectified with these drugs, and eventually they will get cheaper. I know insurance companies don't want to cover them because it means now people won't get as sick. Is how insidious is that? But still, it's a factor.
Very.
Yeah, it is though, but it's a factor. But that could change, and they could get cheaper with pills.
So one last thing I want to ask you about. One market, which we haven't discussed yet, crypto. Is Bitcoin passe now? Is it altcoins and stable coins, or is there still a trade there? What's your
Well, it's
what's your sense there?
Well, if you would have talked to me a month ago, I was like super bullish Ethereum, super bullish Chainlink. And not as bullish in Bitcoin. Now I said at 107 in Bitcoin, that was the bottom. Yep. And I thought it had to get through 114. It did. Now 117 is where the 50-day moving average lives. We can't really seem to get through that. So I think with Bitcoin, you have to look at it sort of like in tranches. But people say Rocktober for Bitcoin. We're getting into a bullish seasonal there. So
very much tracks the stocks.
Yeah. So I like Bitcoin.
What's your vehicle there?
I go right to Coinbase and I trade right. I buy the instrument itself. I buy Bitcoin itself. However, for our clients, we do BITO, BITO.
What about the IBIT?
Not as much, but I have used it. I like, I'm a commodities trader. If I have the opportunity to trade the actual physical commodity, then I prefer to do that. I've been watching Chainlink. That went up high and now has come off. I think that still, though, looks really good as long as it holds over $22. I even think XRP, it had this massive move up. And now if it's sitting at around 3, if it can hold around here, I think I'm very bullish in not every single coin because a lot of them just pop up and then they disappear. But
what
those
about
are,
that world coin thing? That
I don't know. The BMC thing?
I don't know. That's Tom Lee and Dan Ives are involved in that, right?
And R or whatever. I forget the symbol for it. I know.
You gotta go get your retina scanned or something.
Right. That I haven't studied it enough to really know, but
I'm interested in that too. I'm looking at it.
I mean, but right now I'm really trying. there's been so many people crowded into the space. When I say space, I mean actual space satellites and things like that. You know, you hear everybody talking about the same stocks over and over and over again. And yeah, this has become a market that if you go into something crowded and everybody's talking about it on Twitter, you're probably going to at least get a good day trade. But I'm trying to step back a little bit, and maybe that's just because of my age, but look at things that I really think are growing. I think the space and the satellite area will continue to grow, but I also think that cryptocurrency will continue to grow. And I'm really, really trying to learn a lot about tokenization, particularly in real world assets. China's doing it. I get interviewed in China a lot, by the way, and they were asking about it. They're doing it with real estate tokenization, which is interesting. And we haven't really gotten it together here yet, but we're heading in that direction. I'm not sure what to trade off of that yet, though. So I've been looking around.
Well, listen, you have to send me your address so I can send you one of the new Stock Traders Almanacs.
Signed copy, please.
Yeah, of course. And we'll get that out there. But it's been great. I appreciate you joining me. Great catching up. Covered a lot of ground. And hopefully we'll be seeing each other again and we can touch base on things. So thanks again. Thanks, everyone, for tuning in. Again, I'm Jeff Hirsch, and this is Wealthwise on Biz Talk Today TV, brought to you by Crosscheck Media. And if you want to find out more about me and what I'm looking at, go to stocktradersalmanac.com. Check out the new almanac. You can just Google it and come see my new stock basket in the newsletter we just put out last week. So thanks, everybody. Have a great day.
Thank you, Jeff.